Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today, we're diving into FuelCell Energy's proxy statement, which is basically a report card and voting guide all rolled into one. This time, there is drama. With only 48% approval on their executive pay last time, there is pressure, and it's our job to figure out what is happening. So grab your popcorn, because we're about to decode the energy, the people, and the money of FuelCell Energy. Alright, so what's on the agenda for the upcoming shareholder meeting? First, they need to elect 8 directors to the board. Then, there's a vote on whether or not to approve how the company is paying its top executives, a say-on-pay vote. Also, they need to choose an accounting firm, KPMG, for the year, and there is an incentive plan up for a vote. Let's get to the interesting stuff. Let's check the highlights, and the numbers paint a mixed picture. Revenue came in at $112.1 million. On the plus side, they are sitting on $318 million in cash and short-term investments, and they have a hefty $1.16 billion backlog, which is their orders. Their electricity generation also went up this year. In the letter to stockholders, the chairman and CEO discussed the changing landscape for fuel cells. They acknowledge slower than expected adoption of hydrogen and uncertainties with government policies, but are excited their carbonate platform has re-emerged as an important and practical part of the energy transition. They say they are focused on solving specific customer needs with power that is reliable, clean, affordable, and always on. The company mentions they implemented significant cost reductions through a global restructuring, increasing efficiency, and focusing their commercial team on near-term energy delivery and emission management. They are focusing on their carbonate platform and want to enhance the commercial side of their solid oxide platform. These are challenging times, and it sounds like FuelCell is trying to adapt. Now, who gets to vote on all of this? It's the stockholders of record as of February 12th. The board recommends voting for all the director nominees, giving a thumbs up to the executive compensation, and saying yes to ratifying KPMG as the accounting firm. They also want stockholders to approve changes to their incentive plan. What does FuelCell Energy actually do? They are a global leader in clean energy solutions. They make products that generate clean electricity, heat, hydrogen, and water. They are also working on carbon capture technologies. They target various markets, including utilities, data centers, food and beverage companies, and microgrids. The company is focused on sustainability and has plans to reduce their carbon emissions to net zero by 2050. They say they did a corporate greenhouse gas emissions inventory. They are also looking at how they can reduce emissions throughout the value chain of their projects. Their platforms are designed for what they call the circular economy. Let's look at who they want on the board. There are 8 nominees. There is James England, the current chairman, who has been a director since 2008. Jason Few is the president and CEO. Matthew Hilzinger is a former CFO of USG Corporation. Nadika von Althan has a financial background at Bank of America and Citigroup. Cynthia Hansen is an executive at Enbridge Inc. Donna Sims Wilson is the chief operating officer at Ka Capital Management. Betsy Bingham was a lean operations leader for GE Aviation, and Tyrone Michael Jordan is the former president at Dura Automotive Systems. The board has 4 women and is racially diverse as well. How are the directors paid? The non-employee directors get both cash and stock. In fiscal year 2024, they received a $50,000 yearly retainer and RSUs, stock units, valued at $115,000. On top of that, they may have earned additional amounts serving on board committees. Moving on to corporate governance, the board's role is to manage the company, review strategy, and oversee risk. The company splits the roles of CEO and chairman. They believe this is the optimal structure right now. The board is thinking about board refreshment, looking for new candidates with the right skills. Since 2021, they've added 4 new directors. They will strive to maintain an average age of 68 or less and an average tenure of 8 years or less for the independent directors as a group. The company has a code of ethics that applies to everyone and a whistleblower policy where people can report issues anonymously. The company has an insider trading policy, and directors and employees are not allowed to hedge or pledge company stock. They have clawback policies where they can recover compensation from executives in certain situations, such as an accounting restatement or misconduct. To align the interests of directors and executives with stockholders, they have stock ownership guidelines. For example, the CEO should own stock worth 3 times their base salary or 80,000 shares. The board oversees risk management, and different committees handle different types of risks. The Audit, Finance, and Risk Committee deals with financial and cybersecurity risk. Here comes the say-on-pay vote, which gives stockholders a chance to voice their opinion on executive compensation. The board says their compensation principles are designed to attract executives and reward performance, and that there is a clear link between pay and performance. They were not happy with the say-on-pay results last year and have made changes in response. In the past, the vote has been solid at over 80%, but last annual meeting it only reached 48%. The biggest institutional investors wanted no changes. However, the board still made some changes with the goal of being more attractive. They implemented a salary freeze. They reduced the target long-term incentive plan, the ITP, awards for the CEO. They shrunk the CEO's ability to approve equity awards for non-executive employees. They adjusted who was in the peer group they compare themselves to. They have made changes trying to be attractive. Looking at director compensation, the stock awards make up the larger portion of overall pay. However, when looking at the actual types of payments, $50K is for retainer fees, some fees are from participation and the annual awards. The company board of directors has gender diversity, with 4 women and racial diversity on their board. Looking closer at the backgrounds, many of the members have executive-level experience, such as Betsy Bingham, and several members have previously worked as high-level positions in energy companies. There's also a high level of financial expertise within the board. Now onto executive compensation. The main goal is to attract and keep talented executives while also aligning their interests with those of the stockholders. The compensation mix is heavily weighted towards a TRISC pay, meaning it depends on performance. There are also requirements for executives to own company stock. The CEO's target bonus is based on how well FuelCell performs. One portion is based on set milestones, while another portion is based on key strategic goals. For example, one strategic goal was to expand solid oxide manufacturing capacity and produce the initial units. Another goal was demonstration of carbon recovery to be able to address the food and beverage market. Alright, what did FuelCell's CEO actually make versus how well the company performed? For 2024, the CEO's compensation actually paid was $817,719. It may sound low, but it's because so much of his compensation package is based on metrics, and for those to be met, the actual payout can vary greatly. As shown in the table, you can see the CEO's actual pay in 2021 was approximately $11M. Revenue was $112M and net losses at $156M. The company has high hopes set for it, as seen in executive comp, but has fallen short in the prior 3 years. There is a prohibition on insider trading, and there are no tax gross-ups for executives. In closing, the board urges you to vote for the compensation of the executives. Now, let's wrap this up with my take on FuelCell Energy. FuelCell Energy has a clearly defined vision and an active strategy. With a large existing backlog, it has solid revenue to work with, however it hasn't proven it can meet those goals. The biggest opportunity for the company is in being able to demonstrate its carbon capture technology. This is a field that the entire world needs to be able to take advantage of, or the Earth will continue to see rising temperatures. The financials show an attempt to reduce losses, but more progress is expected by investors. This is reflected in the stock valuation. At a fraction of its former high, it will take a lot to turn the ship around, but the board is confident it can deliver. Given this, I'm going to be leaning slightly bullish, but I expect significant turbulence. If it turns out these things can work and can be used in other industries, $25 to $30 looks feasible in the long term, maybe 5 years. Thanks for watching. If you found this helpful, please subscribe, like, and comment.